Well, in today's dark side segment, we are focusing on collateralized debt obligations. And many say these instruments were partly to blame for the global financial crisis. And of course, you heard Sue Keenan there talking about a widening probe from the New York Attorney General's office into some of these securities. But that said, it does look as if the market is gearing up for at least one type of CDO to make a reappearance. According to Moody's, commercial real estate CDOs may emerge as soon as next month for the first time since 2007. Julia Tcherkassova is a commercial mortgage-backed securities analyst at Barclays Capital. She also has garnered top rankings from the Institutional Investor All-American Fixed Income Survey for several years. She's a graduate of Harvard Business School, and she joins us now from her firm in New York. Julia, pleasure to have you. Why has it taken so long? Why have we had this long period of time since the last issuance of a commercial real estate CDO?
Commercial real estate CDOs picked up very substantially in 2007 as the issuance almost reached 40 billion mark. A year later, in 2008, there were no CRE CDO issued. 2009, again, the same story, no issuance. If the news from the rating agencies will prove to be accurate, and we are, in fact, going to see the new CRE CDO in the market, we will actually witness the revival of the CRE CDO market that was at the standstill pretty much since 2007. And I believe there are two big drivers behind it. One of them is that the CRE CDO issuance is very highly correlated to the issuance of the commercial mortgage-backed securities, or CMBS. CMBS issuance also has been at the standstill for the entire 2009 and major part of 2010. In 2010, the second half of the year, CMBS issuance finally started to reemerge, and by the year end, we've seen about 11 billion of CMBS priced and bought by various institutional investors.
Julia, I'm going to break in here because we have to go to break. We are going to come back for more with you because I want to talk to you a little bit about how we look at commercial mortgage-backed securities versus residential mortgage-backed securities. We've been talking about this ongoing probe into mortgage-backed securities by the New York Attorney General's office, and you can put that into context as it relates to some of the CDO issuance on the commercial real estate side. We're going to have more on that. And Julia, we left this at talking about CMBS versus residential mortgage-backed securities. Why is CMBS doing so well?
I think it's very important to remember that CMBS is not exactly the same product as RMBS. CMBS is backed by income-producing properties. It's not the house you usually live in. And that's the reason why the financial dynamic of this product is also very different. It tends to be less volatile. It tends to be less correlated with the economic downturn and economic cycles in general, because the underlying tenant leases have a very long duration, and it's not up to the tenant to discontinue paying the rent.
How do, Julia, delinquency rates compare and default rates compare when you look at residential mortgages versus commercial mortgages?
Because of the lengthy nature of the underlying leases, delinquencies in CMBS, they still are comparably lower versus the residential space. So right now, CMBS delinquencies still stand at around 10% of the entire CMBS universe, compared to 20+% for a lot of the residential sectors.
And Julia, we have only about 15 seconds here. Very quickly, do you expect these CDOs on commercial real estate to price soon, and do you think there's going to be a lot of investor demand?
I believe there's going to be at least one CRE CDO deal that will probably price at the end of May, beginning of June, with potentially 2 additional deals brought during the summertime, and I think that will generate a lot of investor attention.
All right, Julia, thank you so much. We do appreciate your insight into this market, which is not all that transparent to most people. That was Julia Tcherkassova, Senior CMBS Strategist at Barclays Capital.